Hi, everybody. Thanks for being here. Thanks for joining us for the weekly Q&A with Julie Hoffman. I'm Julie Hoffman, and I have a really funny story before we dive into things and I introduce you to our brilliant host, our brilliant speaker. I guess I'm the host. And what's funny, there's something funny about that because I've only done about, I would probably say 500 of these Zoom calls. Only about 500, so keep that in mind. And I get on the Zoom, and we have lovely Mitch who is here, and he joined early. And I'm thinking to myself, well, Jeremy and he had an AI um, assistant also joined, and I'm like, oh, Jeremy must have an assistant named Mitch, and he's right on the ball, and he's brought Mitch's AI assistant in. He's clever. And so I joined Mitch, and I'm thinking Mitch is Jeremy. And we're having this talk. And Mitch is very lovely, very patient. You know, I'm not Jeremy, right? And I'm like, okay, what's going on? Because Jeremy sent me a picture of him in the room. And anyway, I guess I'm having one of those days, folks, where my brain's a little scrambled. And so maybe one of you just needed to hear that because I think all of us can relate to that at one time or another. So again, Mitch, thank you for your grace. Jeremy, thank you also for your grace. And thank everybody for being here on live and whoever ends up listening to this. I know it's going to really help a lot of people. So I want to just share a quick story. Jeremy is our guest tonight, and I was introduced to him from a gentleman by the name of Patrick. And I met Patrick at a networking event. And last week we had Jeremy's brother, Justin, here to talk about insurance and all kinds of different ways you can really, really benefit from the proper insurance policy. And he spoke about real estate investments and real estate investing protection and all kinds of other really important topics. And and I met Patrick from a networking event where I spoke. And so it really, to me, it boils down to go to networking events, go to live networking events because you never know how many people you're going to meet and then how many people you're going to be able to help. Because I know that Justin's event is going to help a lot of people. And I know tonight, Jeremy's event's going to help a lot of people as well. And so, Jeremy, thank you so much. I'm going to let you introduce yourself. What really caught my eye, folks, about this is that Jeremy is really in it to help people take steps forward through something that a lot of us probably don't even think about, myself included, okay? And that is through auto finance. And he's got lots of other things that he can help you folks with. So, without further ado, welcome Jeremie L'Heureux from Edmonton.
So, thank you so much for the kind words and introduction, Julie. Thank you guys. Appreciate spending some time with you guys this evening, away from your families, away from kids and spouses. And so, my name is Jeremie L'Heureux. I'm super excited to spend some time with you guys this evening. We're going to talk about a lot of amazing concepts and strategies and tools to be able to, take control of your finances again. Because I know, in this, situation that we're in with the economy and everything that's going on, we have to make our own economy, right? We can't just let things happen the way they happen. And so I'm going to be able to show you guys some really creative financial tools and strategies to be able to take back control. And so a little bit about my background. So I've been in the financial industry since 2018. In 2021, I actually started building a similar company to what I'm doing now with a former colleague of mine. And things went so well for myself, and I was able to help so many people that I'm like, hey, I'm just going to start my own company and keep going on this path, right? So I really found this calling. And like Julie said, we're very much in alignment, her and I. We want to help people, we want to make a difference, and we want to create a big impact. And so what I'm going to do here is I'm going to share a screen and I'm going to go through and I'm going to walk you guys through a 3 hour presentation. That's going to be a lot of fun. I am kidding, guys. I'm not going to,
3 hours.
take that much time. You don't have to worry about that. It's going to be nice, short, and sweet. So the name of my company is L'Heureux Auto Group. And so we put you into the driver's seat of your finances, pun intended. So a little bit about us. So we offer all kinds of different strategies from refinancing a vehicle loan. We do vehicle purchases, so sales and finance. We're based out of Edmonton, Alberta. I contract myself, my company contracts through a couple different dealership groups in the Edmonton area. Really, what I want to hone in on with you guys this evening, though, is the refinance strategies. And so most people are not aware, most consumers are not aware that we're actually able to wrap up and consolidate high interest unsecured debt into your vehicle loan. Who on the call this evening knew that that was actually a solution and something that you could do as a consumer? Raise your hand, right? Exactly. And so, I'm very passionate about being able to help people with their finances. And this is another strategy to be able to, again, take back control of your finances, right? I meet a lot of clients where they're making minimum payments on their credit cards, for example, right? They're making a payment here, they're making a payment there, but they really aren't actually getting ahead and having a proper plan and a proper strategy in place so that they can, again, take back control of their finances. So this is what I'm going to be primarily sharing and honing in on, specific details of what this actually looks like, how this works, and then being able to share some examples of the actual huge and significant impact that this has in individuals' lives. And so let's talk about some challenges in the consumer auto market today, right? Oftentimes, what happens in the traditional industry is we have, for example, a salesperson or a finance manager that gets somebody hooked on the emotional sell of a vehicle, right? Hey, Mitch, you work very hard for your money. You deserve the best. Let's get you into the best vehicle possible. But they're not quite fully educated and understanding that if I put this vehicle in loan in place for Mitch, how is that going to affect Mitch's short and long-term financial goals, right? Is that going to make sense for him financially, right? And so oftentimes people get into a vehicle and way more payment than what they need. And so with my financial background and all of my team members, we really pride ourselves on putting people into vehicle solutions that actually make sense for them, right? No financial literacy. So a lot of these salespeople and finance managers, they don't actually have any kind of specific courses or certifications that they've taken to be in the positions that they do. And so again, it's not that people in the financial or the traditional automotive industry are bad people. They're not. Most of them are really great people and they want to help you. And they also want to make sure that they're taking care of their family, but they just don't know what they don't know, right? They don't know if they're not educated on something, they don't know and they don't understand how that's going to affect people. And so typically that's going to result in unbalanced finances. Most people in this, country, unfortunately, are car and house poor, right? So most of their money is going towards their vehicle expenses and their house, their mortgage, for example. And so if we look at specifically, I'm in Alberta. So if we're talking about Alberta stats, right, over 80% of Albertans own two or more vehicles in which they're in a negative equity position of either $10,000 or more. And I know that BC is a very similar situation because I have a lot of clients in BC and I see the numbers and that historically and typically that's what I've seen. So we want to shift that narrative to be, more closer to that 10% of someone's income going towards vehicle expenses, where a lot of people are in the 50 and 60% range, right? So if we can restructure things, we can shift things around, we can get closer to that goal, that desired outcome. And so some solutions. So my company is a great solution to be able to wrap up debt, consumer debts from credit cards, lines of credits, right? I've even had a client of mine actually a few months ago, they needed to go overseas to bury their father in the Philippines. They didn't have any disposable cash flow on hand to be able to do that. They had a paid off vehicle with equity in it. We were able to then refinance the loan, pull the equity out of the vehicle so that they could then take those funds, go overseas, bury their father, and do what they needed to do and take care of those kinds of business, right? So there's all kinds of different things that we can do with this, right? I'm going to put a plug in for Julie. If you're looking to work with Julie, on a coaching one-on-one basis, this can be an avenue to be able to have some cash flow to put towards that or to put towards an investment, a down payment on a home, etc. Right? And so those are different things that we can look at. So there's the refinancing avenue, there's the trade-in avenue. So if we have somebody, let's say that they're looking to trade out of their vehicle into something else that's more conducive to their financial situation, right? If somebody is driving a vehicle that doesn't make sense for their lifestyle, they're not able to afford it, affordability is a factor, then we're able to trade them out of that vehicle and get them into a vehicle that's way more conducive to their situation, right? Obviously, the numbers need to make sense. We can't be unrealistic and be like, hey, we're going to trade this, person out of $100,000 vehicle and they owe $150,000 on this vehicle or whatever, right? We need to be realistic, but obviously we're going to work as closely, myself and my team are going to work as closely as possible with you to be able to achieve the desired outcome and the desired goal. The other thing too, like if somebody just wants to have a vehicle and they want to be properly taken care of and they also want to be coached through that process and provided education on when we're going through the sales and finance process of a vehicle and actually understanding what we're doing and not just signing paperwork at the end on the dotted line, but actually understand, hey, what this looks like and actually providing that education, that transparency throughout, then we're also a great solution. If we, for example, have somebody that is in a vehicle where they can't afford the payment and they owe significantly more than what the vehicle is worth, and they have other consumer debts. What we can do, guys, is we can wrap up the vehicle into what's called a consumer proposal. I'm not going to go too much into detail, but I'm sure we've, all heard of the term proposal, consumer proposal, right? Those kinds of things. And so basically what we're able to do is we're able to consolidate and wrap the debt of the vehicle into the proposal along with other debts. So we wrap it up into one package, right? The trustee that's part of that proposal will go to the different lenders and creditors and will negotiate on behalf of you for a lesser debt. So for a very simple example, let's say that somebody had $80,000 worth of debt total. What's going to happen is then the trustee, the insolvency trustee, is going to negotiate on your behalf to, let's say, $20,000 worth of debt instead of having to pay $80,000 of debt to the creditors, so that we're able to diminish the amount of debt we have overall and also wrap up the vehicle where they owed way more than what it was worth and it did not make sense for them to keep that vehicle. So those are the different avenues that we can work with consumers on that level. And so if we're talking about refinancing specifically, the keys to refinancing and the things, the criteria that people need to have be able to have a successful refinance opportunity, typically clients will need to have prime credit. Okay. I can work with people that have non-prime credit. So people that have lower credit scores that are in the rebuilding credit phase. So, anywhere in the higher 500 credit scores, I do have lenders that we'll be able to work with in that process. But typically, we want more a 670 credit score or higher to be able to, achieve this goal. And then vehicle specs, typically vehicles that are 10 model years or newer. So this is a little bit outdated. It says 2014. It's now 2015. I do have one lender that I work with where we can finance any kind of vehicle. I financed the 1976 Chevelle for one of my clients a couple months ago. So that's pretty cool, right? Super, classic car. And it was a 1976. It wasn't a 2015, right? So I work with A, B, and C type lenders, but more specifically on the refinances, we're looking at A lenders and B lenders so that we have preferred interest rates. Now, in terms of borrowing power, this is really where this, power, I think this is a lot of where the value and the benefits of this type of strategy comes into play. So we actually have the ability to borrow up to 140 or 160% of the vehicle's value, right? So what's incredible about that is, let's say, for example, somebody owed $30,000 on a vehicle and it was worth the same amount of $30,000 and they had $12,000 of credit card debt. Well, if you do the math, 30,000 times 140% of its value, that's 42,000, right? So then we're able to consolidate that $12,000 credit card, even though they owe the same as what the value of the vehicle is, which is a very powerful tool. And so I've been able to help many people consolidate quite a bit of debt on the consumer level through this strategy. Um, and so the process is a very, refined process. I'm working on integrating AI technology into this process. So I'm working on finding the right fit for that. So we're not there yet. But basically, for a consumer standpoint, you're going to receive a phone call from either myself or my team, and we're going to go through the initial information gathering. So we're going to gather your personal information, your credit information, and your vehicle information. We're then going to take that information, we're going to go behind the scenes, and we're going to work on an actual plan and a strategy. We're going to put some numbers together. We're going to submit an application to the lender to see if we can get an approval in place. If, for example, we don't get an approval in place, we're not just going to say, hey, Leila, sorry, we can't help you. See you later. No, we're going to actually say, hey, Leila, listen, right now, we're not able to move forward with this because of this and this reason. However, if we do this and this, if we focus on these areas of improvement on credit, because typically a credit is an issue or income, then we can actually revisit this in 6 to 8 months, right? So actually having a game plan moving forward and a strategy so that even though we can't help you right now, we're going to revisit this in 8 months time and we'll have a different outcome, right? And that's happened many times over where 8 months to 12 months later, I was able to actually make a huge difference for the client, whereas initially we just needed to fix some things credit wise, right? So giving some tips and tricks and strategies and education throughout the entire process, and again, that full transparency so that you guys understand from a consumer, hey, this is what's happening, this is the game plan, this is what we're doing. Now, if we have an approval in place, then I'm going to be sharing the information. We're going to either set up a Zoom call or we're going to do a phone call, whichever one is of your preference. And then we're going to go through and going to explain to you the strategy, the numbers. This is what your current situation looks like. This is how much of your total payment is right now with all of your different debts, including the vehicle, if you have a vehicle loan at the time. And this is what things look like now. This is how much cash flow you have freed up now. This is the timeline as to when the loan is going to be paid off, right? And so the nice thing is with doing a vehicle refinance is that you're actually putting a definitive timeline as to when the debt is actually going to be paid off, right? Like I mentioned at the beginning of the presentation, most people are making payments here, making payments there, making the minimum payments here, making the minimum payment there, but they're not actually getting ahead on their debt. Whereas as this strategy, we're actually putting a definitive timeline as to when this debt is going to be paid off, right? And so we have an actual plan and an actual proper strategy to be able to take care of the debt and pay the vehicle off all at the same time. So these are some of our featured lenders that we work with. So like I said, I have access to a lot of the A, B, and C type lenders. So TD, CIBC, National Bank. Those are more your A type lenders, Service Credit Union, Scotiabank. And then we have LendCare. We have Profera. We have IA Auto Finance, which they're huge for working with people that are rebuilding credit and that are in consumer proposal that I mentioned earlier, as well as Santander Consumer. So a lot of different lenders to choose from and options. So this is a specific example of a vehicle refinance. This was a referral that I received from one of my financial broker client referrals. And so basically, they had a vehicle that was worth $46,500. It was a 2021 Volkswagen Atlas Exa-Line, and they owed $14,280 on it. Okay. Now, they did a great job of paying that loan down. However, they had $24,000 in medical loans at 16.99%. The minimum payment on that was 600 a month. Then they had $34,000 of credit card debt at 18.99%. And that's usually lower. That interest rate is lower than the average 20.99% credit card. Minimum payment on that was 550 a month. And then the vehicle loan was at 8.99% at 789 per month over 84 months. So their total payment between the vehicles and the credit cards was just under $2,000 a month, 1939. And total interest that they'd be paying on just the credit card and the medical alone will be over $113,762, just under $114,000, guys, right? And they'd be paying this off in 20 years or never. They were not on pace to take care of any of this when we first sat down with them. Now, after we were able to do the vehicle refinance, because we had so much equity in the vehicle, we were able to consolidate the full $58,000. I want to preface by saying that this doesn't happen always and that we don't always have this much room because most people don't have as much equity in their vehicle to play with. So this is more of an extreme example, but nonetheless, this is still an example that happened that I really feel is valuable to share with you so that you can see the results in the end number. And so the new loan payment for everything altogether was 1167.80 per month at 9.99% on a 96-month term. So that's 8 years, and that's the longest term that you can finance a vehicle for. And the reason why we did that, guys, is because the client was keeping the vehicle for the long term, which is always what we recommend. And so because they were keeping the vehicle for the long term, we put it on the longer term that the vehicle qualified for based on year and kilometers so that the payments are as low as possible so that the cash flow is freed up. As much cash flow per month is freed up because that ultimately is the goal, is to free up cash flow, right? As well as significantly cut down the timeline on paying that off. And so with that being said, we also added extended warranty and we added gap insurance. So extended warranty to make sure that if the vehicle broke down, right, I have many different programs. So if the vehicle breaks down, like your engine, your transmission, right, more expensive components, that you're financially bulletproof. And then gap insurance, how that process works is that if you get into a vehicle in accident and that vehicle gets written off or gets stolen and non-recoverable, what's going to happen is the insurance company is going to pay out whatever the market value of the vehicle is at that specific time. However, if somebody owes more than what that value is, either A, they have to pay that out of pocket, or B, that would get carried over onto your next auto loan as negative equity, which obviously isn't helping anybody get out of debt faster if we're just compounding debt. And so the gap insurance will take care of that remaining amount after the insurance payout is taken care of. So in this situation, the client is financially bulletproof if the vehicle were to break down or if the vehicle were to be written off, right? Just to give peace of mind. And so monthly cash flow save was over $771 a month. And so, for a lot of people, that could be I'm making this month or I'm breaking this month, right? And so that's a big difference made, right? Total interest saved was just under $80,000, $78,630. And if you look at the interest rate average between the left column and the right column, it's an average of 8% reduced, right? And they were paying this off in 20 years before. Now they're paying it off in 8 years or less, which means they're saving 12 years worth of payments. So again, putting a specific and a definitive timeline as to when this client is paying this debt off instead of making that minimum payment of 600 and 550 a month. The other thing too is with the vehicle refinance, this is an open-ended loan, which means that there's no penalties to pay the loan out sooner. And then whatever extra amounts that you put onto the loan over and above the monthly or the biweekly payment go directly towards the principal amount of the loan. So with that being said, let's say we first start with an 8-year loan, but we pay it off in 6 years. That means that you're only paying interest on the 6 years and not the 8 years. So further saving more money overall, right? This is a situation, and I typically, present this type of solution to financial brokers. And so the way that I have this example set up is that this is what was able to be done after the client and I and our team worked together. But basically, just to give you, again, a different kind of lens, a different perspective as to what this could look like, they had a brand new vehicle worth $40,000. And they had 40K of debt owing on it. Sorry, it wasn't worth 40. They had 40,000 owing on it. They had a consolidation loan at 10%, two credit cards that were almost maxed out. They didn't have any cash flow to work with, multiple debt payments, and no way to begin saving for a house, which was really their big goal at the time. After we were able to work together, the consolidation loan was paid off. They were on track for a mortgage pre-approval in 6 months or less because we're able to take care of those different debts, right? Their credit report looks a lot cleaner, a lot better for a pre-approval for a mortgage. And instead of multiple debt payments, everything gets combined into one. Credit cards are paid down to under 30% utilization. Now, as a little tidbit here, in terms of credit and your credit score, most lenders will like to see between a 0 and 35% utilization. That's kind of the sweet spot. And what that means is that you're being responsible with the credit that's being extended to you, but you're also using your credit because credit card companies, lenders, they want you to use the credit, but they want you to be responsible, right? So that 0 to 35% utilization is that little, is kind of that area, that sweet spot. So we're at that 30%, which is right where we want to be. $412 a month of cash flow freed up. They were able to start saving in like a tax-free savings account. For those of you, who know what a TFSA is, right? It's a great investment, long-term investment tool. Opening up a registered education savings plan for their kids, as well as putting life insurance in place for their kids. Their credit score is continuously getting higher because they're making that revolving payment month after month on the vehicle loan. Again, we cleaned up, the credit report where instead of multiple debt payments, there's one debt payment, there's one payment, and then one happy and financially lighter mom of two, right? Which is incredible. And these types of loans, they're a lot of work. I'm not going to sugarcoat it. But when you're able to see the reaction of, a single mom or two working parents, building a family, raising a family and putting that smile on their face when before they didn't feel like they had any hope. And now you're giving them hope. I mean, that's why I do what I do, and why I'm so passionate about this, right? Another really powerful example here is I had a client that owed $18,000 of credit card debt at 19.99%, and they had a 2016 Jeep Grand Cherokee. Their total payment with the credit card and the Jeep was $1,377 a month. What we did is we wrapped up the Jeep and the credit card at 8.99%, and the new monthly payment was $732 a month. So they saved over $645 a month, and they were given back $18,234. So the $18,000 to be able to take care of the credit card, and then a little bit of money to put into their emergency savings, right? Credit card was fully paid off. So how this process works is we're pulling the equity out of the vehicle and we deposit the funds into the client's account. They then take those funds and they pay the credit card off themselves, right? So it's not like you're losing the ability to use the credit card. It's not like you're getting the credit card chopped up. That's your call. If you want to, then after you pay that credit card off, you want to, close the account down, by all means, that's your call. It's your money. But you're not losing the ability for that, to have a credit card, right? And so again, just a very powerful example of this kind of solution that most people don't know. I have my contact information here, and I'm going to share that with Julie so that she can pass that along to you guys. But that's what I have for you guys this evening. And I really appreciate you guys taking the time again to sit in to learn a strategy that most Canadians are not aware of, a strategy that has impacted so many people. I was actually looking at this the other day, but I've been able to save people seven figures total in terms of like the collective interest, save payments, everything like that with myself and my team. So this makes a big difference. And again, I'm really appreciative. So thank you, Julie. I'll hand it back to you. And if we have any questions from anybody, we can do a Q&A.
Yeah, thank you so much, Jeremy. That was really well done. Just straightforward to the point. And it's definitely something that could move so many people forward, especially with home ownership. You could do this strategy and like you just did, better qualify. And even if you need to let everything kind of the dust settle for 6 months to a year before you go try again, or you can tell your kids, tell your relatives, people that want to get into home ownership space. That was kind of, what I get excited about because I hear so often how people can get turned down for financing, and often it's because their credit cards are too high and they have a vehicle loan. So it's what a great way. And I never heard of it till I was a speaker at an event. Then I met Patrick. And then I met Jeremy. So pretty cool stuff. Who has questions? I had questions and then they got answered in like the following slides. So, and if nobody has questions,
I have a question.
awesome.
How can you reduce that in what makes it reduce this debt or payments?
Yeah, great question. So basically, Jay, what we're doing is we're combining multiple payments into one payment, right? So for example, let's say that between the vehicle loan and the credit card debt, the total payment monthly was $1,200, but we're then able to refinance it, and the new payment together is $600. That means you freed up $600 a month, right? And so that's ultimately how we're able to do that. Now, myself and my team, obviously, with us coming from a financial background, if we look at the numbers and we're like, you know what, this doesn't make sense to present to the client, we're not going to present the option to the client. We're going to say, this strategy doesn't make sense. These numbers don't align. And so we're going to refer you back to the individual that referred you to us. Typically, we have referrals coming in from financial brokers, mortgage brokers. So that's a lot of the clientele that we work with. But yeah, we're not going to present the option if the numbers don't line up and the numbers don't make sense, because we're not here to waste your time and we're not here to waste our time, because we have way more people to help in the process. Hope that answers your question. And thanks for the
Uh,
question, Jay.
no, what I understand, vehicle is a depreciating asset,
Yep.
right? And and like I can understand like you can uh, in case of residential um, or commercial asset, there is an asset which is appreciating asset, and you are able to uh, get it from the equity. But in this case, from where are you getting that money? Like with refinancing, how are you able to reduce the payments?
Yeah, no, that's a great question. So you are right. Like in a technical term, like the vehicle is a depreciating asset because over time it will lose its value. However, there's still value in a vehicle, right? And so, whatever the value of that vehicle is, we're able to borrow even more than what that value is through the different lenders, for example, TD, CIBC, Scotiabank, right? All of the lenders that you know and that you work with on a daily basis, both personally and professionally, right? That's where the money comes from, right? It's through those different lenders. And so they look at the market value, whatever the value of that vehicle is at that time, right? That's how we evaluate that. And that's how we're able to complete this process.
Well, and can I add to that? Do you mind?
Absolutely, please.
I know, and this is where my brain kind of wrapped around it. So maybe this will, um, for me, I go back to the fact that it can be an 8 year term max, right? So they
Correct.
take those payments and the the debt's getting paid down fast because it's 8 years. versus a credit card, which could be a million year, right?
Yeah.
So it's just interest only. So every one of these new payments that are way more affordable, more of that money goes to paying down the debt faster. And I think it's amazing that somebody can go to 160 of 160% of the value. I mean, am I right in thinking that it's also maybe vehicles are depreciating assets? At the same time, aren't they a bit less risky because it's lower amounts versus a house, which is, depending on where you're at, you're looking at a minimum of a two or $300,000 loan, depending, right?
Absolutely, Julie. That's a good, add-on for sure. Is like you say, there's that timeline. You're paying it off faster. You're not paying it off in 30 years, 25 years, right? And yes, the actual amount that you're financing is significantly less. So yeah, absolutely. Those are great points to add in there.
I'm so excited about it. Seriously. Like my daughter, I'll just give my daughter an example. She probably doesn't want me sharing this. At the same time, I think everybody can learn. She has a little bit of outstanding student loan, and her vehicle that would fit within this criteria is 2 years from being paid off. And her student loan is at I know it's in the double digits, so this might be a big help to her. And I know it's amortized way out. So it's like a long amortization. So to be able to use her card to pay off her student loan, she'll pay it off that much faster. And that's important to lenders too. So I'm excited. I already told you that I wanted to talk to you about it. So
I love that, Julie. Yeah,
I
this
think
definitely
that'd be good.
sounds like something that we can work on together. Absolutely.
Yeah, so most people, when they think, "Oh, I don't know how I'm ever going to do this. I just can't move forward." Maybe a good question, if you're listening to this or if you're here tonight, is say, "What kind of car do you have? When did you buy it?" If somebody has a 20, like the example you gave, if somebody has a 2021 vehicle and it started as a 7 year loan, but now it's only got 2 years left on it, that's why that person has so much equity, right?
Yes, exactly. Yeah, in that situation, yeah, I believe they only had 3 years left owing, left on the vehicle loan. And the other thing too, guys, is how vehicle like open-ended conditional sales contract loans work when it comes to the interest side of things is that typically in the first 2 to 3 years, most of your vehicle payment is going to go, majority of it's going to go toward the interest of the loan itself, right? And then once you get past that 3 year mark, then most of the interest has been paid off by that point, and pretty much 100% of the monthly payment that you put onto the vehicle loan is going towards the principal, right? So that if you're looking at, okay, I bought a vehicle 2 years ago, why haven't I really seen much of a dent
Yeah.
in the actual principal amount of the loan? That's the reason why, right? But then if you're 4 or 5 years into, a 7 or 8 year term, yes, you're going to have a lot more equity typically to work with, unless obviously you were oversold the vehicle, which does happen. But in that situation, in that example that Julie is mentioning, they had 3 years left on the loan, so they had a lot more equity to play with. Absolutely.
Um,
Hey, I think you have a question. Hopefully, I
Yeah.
pronounced your name correctly. I'm sorry if I didn't. I apologize.
Hey, Jeremy, I do have a question. My name is Shree. I do have a fleet of vehicles and it's all finance, and I'm actually using for my business. Would you
Cool.
have any program that we could refinance all of the vehicle into one loan?
Yeah, so like it depends obviously on the numbers, but that could potentially be an option and a solution. I do work with one lender that we do commercial vehicle refinancing, and I have one of my business partners that she has access to many different lenders. So that's definitely a conversation that you and I can have, Shri. Absolutely, that would be awesome.
Yeah.
I help people also with like commercial equipment, so like heavy equipment. I have A client of mine, he owns a company. They have 18 wheelers. We just pulled out over $500,000 of equity out of his, 18 wheelers because he had them all paid off, but he needed some money for expansion in the business. So again, all kinds of different avenues with that.
Mhm.
Yeah, exactly. I'm actually increasing my fleet. So I do have like a 9 vehicles right at the moment, but I probably might add a couple more.
Awesome.
So yeah, I just don't want to go through the dealership financing because they usually do offer like a high interest loan, which is right now currently I have like a 9.99 something.
Mhm.
So I just want to consolidate that into the one loan and get a one lump sum payment.
Yeah, we might be able to look at that for sure.
Okay. All right. Thank you.
Thank you.
Hi,
Great
Sri.
questions, guys. Keep them coming.
Sri, if you want to put your contact info in the chat, if anybody's looking for a nice car to rent when they come to the Okanagan, you should reach out to Sri. He's a
Thank,
longtime OREIG member and sponsor.
Awesome. I
thank you
love
so
it.
much. Yes, I will.
Awesome.
Not so much a question, but looking forward to discussing this more with you, Jeremy. I run a rent-to-own company, so I have lots of clients that we're trying to get into home ownership who just have too much consumer debt. And unfortunately, I see a lot of them go into consumer proposals, which messes everything up for us helping them in the short term anyway. And something like this might be a good option for some of them.
Awesome, Mitch. Yeah, I look forward to connecting with you further too. It's I agree with you. Like so many people, they get rolled into a consumer proposal for, $11,000 in consumer debt. That's not a situation where they should be put into a consumer proposal at all. And it happens way too often. So
Yeah.
absolutely, definitely excited to connect with you. Thanks for being on, my friend.
Yeah.
Yeah, looking forward to it.
Awesome.
One
Anybody
more
else?
question, Jeremy. How could we able to refinance 140% or 160% on the vehicle? Just
Yeah, so it's
curious.
just yeah, great question. So it's just based on like the history of what lenders are comfortable being able to take on from a total loan amount, and what has historically been done in the automotive industry. So I mean, this has been happening basically since the inception of, the traditional automotive industry. So that's really, they look at, okay, how much liability in that from a lender's perspective, how much liability do I want to take on? And then, what are the ratios there? So that's ultimately where they determine, what we're able to take on and leverage from that.
All right. Thank you.
Thank you. Thank you.
And one more thing, actually, I do work as an insurance agent.
Oh,
So for the gap insurance that you mentioned, if you're there in the BC, you can send me their contacts. I can set them up for the new car replacement insurance and the better car replacement insurance.
Perfect. Love that.
that's great.
Love that.
Yeah.
Can you, I see you put a link here. Can you put your contact information there, Sri, if you're comfortable, please?
Yeah, for sure.
Thank you. And then you as well, Mitch. That'd be awesome.
Mitch, you're doing a
Thank you.
lot of rent-to-owns in Alberta, correct?
Mostly Alberta, but working on expanding to Saskatoon, Regina, and I have one out in St. John's, Newfoundland now. I might try to get a few more to make the flight out there worth it to go meet my clients. So,
That makes sense. Plus,
mhm.
it's a cool place to go visit.
I haven't been yet, so looking forward to it.
Nice. All right. Wow, what a great event. Shri, I will make sure that your contact information is put around here. In the event that somebody wants to rent a vehicle, if they're coming to the Okanagan, I know Shri is he's excellent at customer service, a good man, and he'll take great care of you. So I'm
Thank you so much,
also,
Julie.
and my pleasure. I'm also not so secretly now because I'm about to announce it. Hoping that Jeremy and his brother Justin can make a trek out to British Columbia to the Okanagan to have a LaRue Brothers Okanagan Real Estate Investment Group event. So stay tuned for that, folks. That I hope will be a lot of fun at some point.
I'm sure we can action something up here for sure.
That'll be a lot of fun. Okay, anybody else? Questions, comments? All right. So thanks again, everybody, for being here. I'm just going to end off with a quick story. I was just in Colorado visiting my 83-year-old dad. And one of the reasons why I do real estate investment is because he was a real estate investor and I watched him do it. And I think it got into my blood. And what that's resulted in as a byproduct is that I just am so blessed to have so much freedom, including the freedom to be able to go down and spend the weekend with him and my sisters. And in fact, what we spent a lot of our time doing was estate planning for him in the event that something happens. And so I'm not only grateful for the freedom to have that, but I'm very thankful for the ability to have this knowledge about real estate and interest rates and even what we're talking about with amortizations and all of these things that you learn when you sit on these kinds of events can really spill over into our regular day-to-day lives. And now me and my sisters are ready, like I said, in the event that something, God forbid, it happens, but eventually, that none of us can avoid death or taxes, right? And we're ready. So if you haven't already done that, folks, then maybe start having conversations with your family. I just feel inspired to mention that. And again, if you're thinking of making that entrepreneurial leap, it can create that kind of freedom, which can have just a massive impact on people. So I'll leave you with that. Thanks again for being here, Jeremy. You did awesome. I'm not surprised at all. And we will see you all next week, hopefully on the weekly Q&A. It's just going to be probably an open agenda. I may talk about a little bit about Rentone. Love to have you there, Mitch, if you want to join with your feedback. Everybody does it a little different, and everybody's invited. So keep a lookout for those notifications, and we'll see you next time. Thanks, folks. Bye.
Bye, guys.
Bye.
Bye. Thank you. Bye, Julie.
Good
Thank
to
you
see
so
you.
much.
Good to see
Good
you. Thanks
night.
for being here, Lila.
Thank you. Bye-bye.